Let's move on to another part of the story, of course, which is regulators and the meme stocks as well as that volatility continues. Amy Lynch is a former SEC regulator, now the founder of Frontline Compliance. And Amy, just weigh in for us here in terms of whether there even is a compliance/regulatory framework to this. Is there something to be looked at, or have we already gone through this, given we saw it happen with GameStop a number of months ago?
Good morning, David. Thanks for having me back on the show today. And yes, here we are again. When we last spoke in January, we were talking about GameStop and the run up there with that security. And now we're here again, and we are talking about AMC. And at first, I think the past few weeks, it was looking very similar what was happening with AMC in relation to what happened to GameStop in January. But now we've had, just in the past few days, we've had some significant changes. And that, of course, is with the offerings that were announced. So first, we had the special offering with Mudrick Capital, which occurred a couple days ago. And now we have the offering that was just announced this morning to the general public. So there are definite differences now between what is happening with the AMC trade versus the GameStop trade.
Yeah, but does any of it mean that there's going to be more regulatory scrutiny, or is AMC doing what it should do? I mean, it's raising capital to the extent it can within its authorization, given the run-up in its stock. And they've done successfully so, by the way, many times during the course of this period. Is there anything that we've learned from what we saw in GameStop or that's new to this situation that you believe rises to the level where the SEC is going to be taking a closer look?
Well, one thing I can say that they did was very smart, was when they put out their 8K, as you mentioned before in your show, is that they were disclosing to investors that this is a high risk investment. They could lose all of their money. They should not be investing or buying these shares because of the volatility. So they really did try to cover their bases as far as their disclosures to investors in this offering. And that was a huge, big piece of disclosure for all of those Reddit traders out there, to basically warn them and say, listen, you should not be purchasing these shares at these prices. You could lose all of your money. And the SEC is very concerned about that. And of course, their mandate is to protect the retail investors. So they like to see those disclosures. And I think that the fact that they put that language very explicitly in bold print in their filings does go a long way to protect them with this offering.
Amy, I wonder, speaking of disclosure, this new platform that AMC rolled out this week to connect with retail investors, giving them some promotional materials, popcorn, invitations to screening, but also the ability to communicate more directly with management. Does that raise eyebrows from a disclosure standpoint or not?
Well, it's interesting that they're doing that. I actually went to the website myself for that, amcstubs.com, I believe it is, that you can sign up as a shareholder to get your free popcorn. And I think this is just a promotional campaign. That's what it looks like. So I don't know how meaningful that part of their offering is really going to be. It'll be interesting to see how that plays out. It's very new.
Yeah, I mean, it certainly speaks to the fact that some of these individual investors are also prospective customers for a company like AMC, Amy. I'm curious, though, given the comments that we got from SEC Chief Gensler not that long ago about him saying that he's in favor of reducing the standard settlement period, that's obviously got broader implications to the market writ large. But given the fact that we are having these conversations about these retail investor-fueled spikes in certain stocks and what we saw play out with Robinhood, for example, earlier in the year around GameStop, is that something that could actually be yielded from all of the market activity we are seeing in some of these meme-themed trades?
Well, shortening the settlement period will go a long way towards the margin requirements, the collateral requirements that the brokerages like the Robinhoods have to maintain for DTCC purposes. So, yes, that will definitely add more plumbing to the market, so to speak, and really be helpful to the large players in these stocks that have to hold those securities on hand so they can provide them to their customers. So that would be a big win for the industry if they could shorten the settlement period for sure.
Shepard Smith here. Thanks for watching CNBC on YouTube.